Hello together and welcome back to this weekly update on financial markets. I will cover what you like always on a weekly, daily and 4-hour time frame. The S&P 500 index, US oil, gold, Bitcoin against US dollar and my current trades. So let's stay tuned. If you want to skip any part of the video, down there is a timeline. There you can jump directly to the asset you are most interested in. Let's start in with the S&P 500 index on a weekly time frame. Here on a weekly time frame, you can see we are still in an uptrend, but yeah, the last weekly low, it's getting tested and was slightly violated to the downside. Now we're getting rejected to the upside here on Monday, right at the 50-week moving average. But last time we have seen a loss of these weekly swing lows. Normally what happens afterwards is a longer lasting downtrend, sharp corrective moves, 20% to 25%, and that could be fitting also here from the high to the 0.382 Fibonacci retracement level in combination with this orange weekly uptrend line. That would be roughly 20%. The long-term uptrend would still be intact, supported by the 200-week moving average. So the normal behavior here, and with the geopolitical things going on, that can easily happen. If we drop one time frame lower to the daily time frame, you can see that we are rolling over from an uptrend to a downtrend. The 200-day moving average was left behind to the downside. We are correcting right now to the upside. I think it's not impossible to see here a bear market rally, so sharp corrective moves to the upside before then rolling over again and continuing the overall downtrend. First target would be the orange weekly support zone from the last all-time high here around the 6,150 point level in the market, and afterwards it can easily go lower all the way back down here to the weekly uptrend line. And if we measure with the Fibonacci tool from the low to the high of this last leg up, that would be fitting with the 0.618 Fibonacci retracement level. So not that unlikely in my view. So I'm staying still cautious. Of course, it can be a large range here, and if we see only sideways consolidation without breaking this low to the downside, then there's still a chance that we break up to the upper side and resolve higher. But yeah, I'm having a hedging position. I opened that one up the first time we broke out of the range and came back in, and I'm looking out to maybe increase that slightly if we test this white support zone or resistance zone now from the downside again, in case that we roll over and see this 20% decline. I want to protect some of my long-term investments here, hedge it a bit, and yeah, at the bottom I would sell it for profit and then make a long-term investment 20% cheaper and ride the next leg higher. So long-term bullish, but mid-term bearish, and short-term we can see a small bullish push in my view. The 4-hour time frame, you see it only in more detail. So we are oversold right now. So yeah, a move back into the moving averages would be normal behavior. But even if we make here now, let's say 3% to the upper side, doesn't mean that the market is now then out of risk. We are still staying below the moving averages, and therefore you have to be cautious also with single stock positions. That's all I have for the S&P 500 index. Let's switch to US oil, where we see today massive declines. Crude oil on a weekly time frame, we see a red solid monthly downtrend line. That one got broken to the upside. Since then we're moving an A, B, C corrective move on a weekly time frame with the weekly orange downtrend line. That one got heavily broken with the news driven with the Iran war going on. We had a move up to 120 US dollars per barrel, was a bit high. We have calmed down already, seeing today high selling pressure start of the week. If we drop down to the daily time frame, you can see it in more detail. We've seen higher highs, higher lows, but then we have seen the first lower high, and then we lost the 10-day moving average here and declining today to the downside. MACD is also crossing to the downside, so maybe we see now a pause in this rising oil prices. But it's a heavily news-driven market, so everything can happen right now here. But falling oil prices would be beneficial for the stock market. So I hope that it will continue declining. On the 4 time frame, yeah, we had this sideways range here that was building. We have seen a break to the downside. Now with this wicks sticking out, you see finding here some support. Maybe we'll see also here a pullback to the range, maybe into the moving averages, and then continue falling to the downside, maybe to the 4-hour to 1 moving average here. That would be normal price behavior. And from there on, we are finding massive support again, and then we will see what happens there. But yeah, of course, everything is heavily driven by news. So hard to trade this market if you don't know what's happening tomorrow or a president is posting on social media. So I'm not trading this market right now out of obvious reasons. Let's switch to gold. Gold on the weekly time frame, we can see after this long-lasting resistance zone around the $2,000 per ounce level, we've seen a breakout, and from there on only higher highs followed by higher lows until now. We've seen an all-time high, a higher low, and here the first lower high, and now we have seen also a lower low, even if that one is now getting bought up again. But technically we changed from an uptrend to a downtrend with this here, and because of that I think the likelihood is there that we will see maybe a move all the way back down to this orange weekly uptrend line. No guarantees here. The 50-week moving average is also pretty strong support, so that can be also the necessary support for price to hold, maybe move a bit sideways and then continue rising. I don't know that for sure, obviously, no crystal ball on hand. If we switch down to the daily time frame, you can see that the daily secondary uptrend line was broken to the downside with this moving average cross of the 10-day and the 50-day moving average. The sell-off was rapidly all the way back down to the 200-day moving average. Picture perfect. We turned here and snapped back higher, and yeah, the daily uptrend is also still intact. So technically, yeah, it can be possible that we wiggle a little bit around here, around that level, till we test this daily uptrend, and from there on continue higher again. We don't have to see necessary to break down below the 200 moving average, because everything above that is still bullish, and so you should bet more on rising prices than on falling prices statistically. So yeah, still bullish for gold, more bullish than I'm for the S&P 500 index for sure. But in risky times, everything gets sold off, especially things where a lot of people have huge profits in, and gold had a good run the last couple of months and even years. So there's a lot of profit taking that gets made to cash at the moments where cash is king. So not that risk haven asset you might expect, but at least not at the moment where the risk occurs or the conflicts evolve. But later on, normally gold is the first one to recover. We've seen that in financial market crisis, etc. Yeah, at the 4-hour time frame, not so much more to say. We have tested here the support zone. From there we are rejecting, but it's a falling knife at the moment, so I would wait for stabilization here. Then let's continue with Bitcoin. Yeah, Bitcoin had his 3 years of price appreciation, and now the last year of the 4-year cycle is happening with the decline, like we can obviously see, but we're nearing the 200-week moving average in combination with this monthly uptrend line here, and the 0.618 Fibonacci retracement level ain't far away together with the prior all-time high level. So we are nearing the interesting marks to buy long-term Bitcoin. And yeah, I'm buying already, so I'm definitely on board once this rocket starts again to the upside. But yeah, if I would have to bet, I would bet that Bitcoin will still fall all the way down to the $57,000 level here, right around the 200 moving average, the 0.618 Fibonacci level, in combination with this monthly uptrend line. And there I would also increase heavily my buying in this asset, but no guarantee that the price will hold there. Bitcoin is a pretty volatile asset, so it can easily slip below that, maybe test here this weekly support zone around the 50,000 level, dip shorter below it and snap then right back up. So yeah, be cautious with your stop losses here. We have to wait for active trading positions for a price confirmation, printing higher highs and higher lows or something like that. On the daily time frame, we can see we're still below the daily downtrend line, and we have built here a flag to the upside that normally will get broken sooner or later to the downside in a downtrend and continue lower, bringing us to the levels I discussed a couple of seconds ago. But at the moment, my expectancy is we will still see a bit more bullish price action, maybe all the way back up to this daily downtrend line, and from there on reverse lower again. On the 4-hour time frame, yeah, you can see here the 4-hour uptrend line slightly violated to the downside, then snap back up. Either we are continuing right now or we lose this prior 4-hour low, and then we will probably not see that this daily downtrend gets tested again and see more of an immediate downturn here. Not trading Bitcoin at the moment, but you can make your own picture and decide for yourself if you're willing to trade it at the moment in this situation, or like me, wait patiently for good opportunities. That's all for my 4 major assets. What will now follow are my single stocks that I'm currently trading. Yeah, I would like to start off with JBL Inc. JBL, and we had a sideways consolidation, a breakout, and since then higher highs followed by higher lows. 50-day moving average is supporting. We have seen a push below the 50-day moving average and recovered from there on. So first I moved my stop loss below that low. Later we've seen a push lower near that low that got directly bought again. So I moved my stop loss to break even right below that. I sold already 50% of my position and right the rest now higher, hoping that we will see new all-time highs. And yeah, trade my stop loss accordingly. At the moment, no action for me. Looks good right now. Let's continue with the uranium ETF. Here the uranium ETF Global X Uranium. I was on a long trade after seeing in an uptrend the downtrend getting broken to the upside. That worked pretty well. We have seen a new all-time high. I sold 50% of my position. Once I made my risk as profit, then I trade my stop loss higher below this daily support zone, and like you can see, yeah, price hit that stop loss. I got stopped out for a small loss in combination with the 50% profit sell. I am still in a small profit, but yeah, I'm stopped out right now, all of this position in a small profit, but better than no profit or a loss. And yeah, still not looking that bearish, but definitely the daily uptrend is broken to the downside. We are recovering right now from a 200 moving average. Yeah, I would definitely wait for re-entering here if we see a nice push, higher high and higher low, and then continuation of an uptrend like we have seen here in the past. Right now, the pattern is broken to me. Next, Rolls-Royce Holdings. Rolls-Royce Holdings, the defense stock, somehow similar. We have seen an uptrend, we had seen a pullback in ABC pattern, and then a break to a new all-time high, and the long worked perfectly well. We have seen a 1-to-1 risk-reward ratio, and I sold there 50% of the position. With that, I took my trade risk-free, tried my stop loss higher below the last swing lows here and the daily support zone. And yeah, the uptrend also got broken to the downside here with breaking the last swing lows to the downside. I sold there 100% of the rest of the position with a small loss also here, in combination the partial take profit with the reduced risk stop loss. I made also here a small profit in the trade, but the trend for me is at the moment short-term broken, even if the long-term trend is for sure still intact, but somewhere you have to reduce and control your risk. Next, FIX or Comfort Systems USA is a nice uptrend that's getting steeper after sideways consolidation in an intact uptrend supported by the 50-day moving average. I traded the breakout to a new all-time high here, and at a 1-to-1 risk-reward ratio I sold also here 50% of the position and reduced my stop loss here first to the entry level below the last swing low, and now I'm already in the profit zone with my stop loss below the last swing low and the 50-day moving average. I haven't seen a new all-time high yet. I hope that we will see one in the next coming days and weeks. The uptrend is still intact. If it should break, I would get stopped out and make also a profit with the stop loss, and that would, in combination with my already partial profit taking, would be a nice winning trade. But hopefully we can take a bit more out of that than this right now. We will see what the future will hold. Then we continue with Planet Labs. Planet Labs, pretty volatile stock, this time in my favor. We have here been sideways moving for a longer time after I entered long trade after, yeah, I would say this is a continuation trade because we have seen an uptrend, a pullback and a break of the downtrend to the upper side. I entered long. We followed the 50-day moving average here, but market was volatile. S&P 500 was falling, so I reduced my risk and trailed all the way back down to this last swing low here. And then yeah, luckily good news came in, good earnings and a deal with NVIDIA, and the price gapped to the upside. Normally I would have planned to take partial wins at the 1-to-1 risk-reward ratio, but because the price gapped up higher, I was realizing 50% of the position at a 1.76 risk-reward ratio. That's for sure better. 0.9% of my account balance in profit I realized here, or nearly 80 euros. I also moved my stop loss afterwards higher, also slightly in the profit zone, but staying below this gap to give it a little bit of room of cooling off after this good news, but I'm expecting that will continue afterwards higher and trail then my stop loss accordingly further into profit. Then we have OGE Energy. OGE Energy Corp was sideways consolidating at an all-time high level, breaking out to the upper side, waited for pullback here to get long in this stock. But then afterwards we have seen here with an ABC pattern the decline of the stock together with an overall broader market that is falling. So I reduced here also my risk below this small candle, what was getting sold, and then bought again, used that as my stop loss level, if you will. So slightly above the 50-day moving average, at least the moving average developed there to that level. And yeah, luckily it turned slightly before that. And today is again a green day, but the selling volume on that day was definitely higher than the buying volume on this green day. So yeah, maybe I got away with the blue eye here, but the risk ain't over. I'm letting my stop loss right there where it is with the already reduced risk here. But maybe this ABC pattern will resolve to the upside. That would be nice. And yeah, at the 1-to-1 risk-reward ratio, I would again take partial wins and ride the rest, hopefully higher. Then RTX Corporation. RTX Corporation is a nice uptrend, but yeah, some concerns with the trade here. The idea was initially that we have here sideways consolidation, a breakout to the upside, a pullback, and then pulling back, getting bought here and breaking again higher. I wasn't patient enough to wait for a new all-time high, so break of this pullback to the upside. Instead, I bought the lower high here. That was a fault by me. Not the best trade ever taken. And then afterwards we've seen the decline here. The 50-day moving average is already broken. We can see today is even a red day, and the stop loss is placed below this daily uptrend and daily support zone here. What can easily happen is that we dip slightly below that with a wick, take me out of the trade, and then continue from there to the upper side because the daily uptrend line is still intact. But yeah, once I decided for stop loss, I never touch it. That's one of my rules. Next time I either have to place my stop loss better or find a better entry. But with the distance between the entry and the stop loss level, I defined my risk in my portfolio per trade, so I don't touch it afterwards. I only put it higher to reduce risk, but I never enlarge risk in a trade. Next, Nebius. Nebius Group. Yeah, we have here also news together with NVIDIA. The downtrend got broken to the upper side after bottom formation was building, supported by the moving averages. We've seen a breakout, a news driven with a price gap to the upper side, but that one got sold after, I think it was concerns with the debt that the firm has and has to repay, and maybe if interest rates are not far falling but instead maybe rising because of inflation, then yeah, that can get ugly for that stock. But so far we are still below this daily support zone. Once it was resistance, now it turned support, and I decided for myself that I'm thinking about closing the trade once we see a daily close below that range here. Otherwise, I think the uptrend, the short-term developed uptrend, is still intact, and I should give it some room to work out here. Then a new trade I took today is Applied Materials. Applied Materials had a pretty nice run so far since we left behind the all-time high from July 2024. We have seen a nice breakout and higher highs followed by higher lows afterwards, all supported by the 50-day moving average here. And we have seen a pullback to this daily uptrend line and a rejection higher, supported by the 50-day moving average. Small pullback to the 50-day moving average and a continuation high again. Massive volume, and here this daily candle, you can see the head is at the top of the candle or of the bar, and a long wick sticking out to the downside. That means that the bulls have bought the complete candle back up and closed near its day high. It's not that bearish, even if the candle here is now red, because the day closed negative. MACD is pretty close to cross to the upper side, and I decided on the 4-hour time frame to enter long, I was setting a buy limit order above that 4-hour range that got triggered at the 4-hour time frame. The moving average are coming together and price is moving above that, so they are support right now. Place my stop loss below that. So yeah, the trade got triggered, but the wicks are sticking out to the upper side, so a lot of profit taking was taking place here. So yeah, we have to see if that one holds. If we close the day above this range here, if we fall back lower, then hope that this support in form of the moving average is holding. Otherwise, my stop loss is there to reduce risk. And if we fall below this daily uptrend, then I think, yeah, the uptrend is short-term over and we will go into a decline here. Yeah, that's all I have right now for this weekly update. I hope you found it interesting and got some ideas for your own out of it. And I hope you subscribe to the channel if that hasn't happened yet. Till next time, bye bye.